Well, hello and welcome and hello. Thank you for tuning in to Un Poco Mas, the show where we give you just a little bit more. You've got us on a Monday here. Happy Monday. It is September 25th, 2023. It is a special edition of the Little Pachulik Shokolats investment hour. First off, we would like to say a very happy birthday to Cutie, our wonderful, amazing dog, Princess Jay's dog. We love both Princess Jay and Cutie very much. It's Cutie's birthday today. Happy birthday, Cutes. What an amazing little dog and just a precious, loved member of our family. With that important detail, I would like to get into today's broadcast, if you will. Of course, if the day ends in a Y, we're talking with you about the SoFi stock. Guys, it was a crazy one last week. SoFi getting absolutely hammered. If you remember, just on September 15th, the stock was above $9. Like it peaked above nine, I think, three times here. And then basically sold off daily in 50-cent increments the last couple days. A couple of things worth noting, guys. The volume accelerated into that sell off, and I've said for a long time, I don't think there's any appetite to sell the SoFi stock under $8. And it may look like I was wrong, and obviously I was wrong, but you have to see how did they get this thing from 8 to 750 on Friday. And if you look at the short volume and the short report, including the dark pool, you would see that they borrowed 14 million shares on Friday, and only returned 5 million. So 9 million net borrowed out of what was it, 38 million shares traded. So you have almost, 23% or something of the entire churn was borrowed shares. And, basically indicative of shorting activity, either hedging from longs, short longs. And then if you take a look at one of these new articles that's out on Seeking Alpha, which is, another good article, just jam-packed with data, Giannis Zormpanos, I always butcher those Greek names. But this guy, again, this is why I like Seeking Alpha, because their authors have a lot of data and a lot of analysis. It's not just these fluff AI pieces you see on a lot of other sites. And obviously 8 broke down, guys. There's just no there's just no two ways about that. If you look here from, this big huge gap down into September 21st, the stock actually trades sideways September 21st, and then resumes selling off below 8 the 22nd, and then, seems to be holding right now at 750. I guess everybody wants to know, will it break down and go down another 50 cents to 7? There's a few reasons I don't think so. Number one, the volume has been accelerating. This is last basically where the stock was trading flat. I know you can't see this because my giant head is in the way. Let me move myself over here. Anyway, so the volume was very low when it was trading sideways there at like 860, and then it starts accelerating and the stock starts going down basically 50 cents every day. We go 20, we're trading 18 million shares, then 22, then 30 million shares, and then 39 million shares on Friday. Today, the volume slows down. When you have volume accelerating into a trend and then that reverses, that can sometimes signal a reversal of that trend. Obviously, you have to look at everything in context. That's why taking a look at the options, do you expect market makers to push the stock down much lower? So you take a look at the puts. There is quite a few puts at 7, um, and then there's a lot of puts also at 750 and 8. There's relatively few down in the sixes. So you're not looking at a lot of hedging activity where market makers are expecting to push this stock down into the sixes, in my opinion. I think I would be very surprised if they push it even down to 7. I'm just not seeing the volume to do that. I'm not seeing the options to do that. And even today, guys, it's only holding steady because they're just shorting the hell out of the stock again. Like, Look at the volume today, okay? So 14 million shares have traded today. And then if you take a look at the live short interest, they're borrowed 6 million, return 3, so almost 3 million shares borrowed net out of 14 million shares traded. So that's like more than 20% of the entire churn. And then the stock is still basically flat with that huge short and borrowing. So the stock would be going up, guys. So I think this is why you have to look. There's not just fundamental and technical reasons stocks go up and down. There's also what I call sort of the third leg is mechanics, mechanical reasons. You can just move a stock with money. You don't even need to influence the retail investors. Like, that's, of course, what they want to do. They are triggering stop losses, they are shaking people out of the stock. I believe there will definitely be another pump and dump or dump and pump on the next earnings report. They want another bite at the apple before net profit. This volatility is just not indicative of a stock with super steady fundamentals that hits their numbers. Honestly, SoFi's growth is impressive, and I really love the management. I think they're doing an exceptional job, but it's not fireworks. It's not explosive. It's not like new, where they're just growing at this incredible rate, or it's not like a firm where they look horrible 1 minute, 1 quarter last year, and then all of a sudden the stock just goes insane because not only a short squeeze, but because all of a sudden they look really good again. People want to finance them. They're working with new clients. They have, Amazon, whatever the case might be. So these stocks are all over. SoFi is one of these stocks that market makers just have a field day with because they can, because it's so consistent. The growth is predictable. They can spin ERs, good or bad, whichever way they want. They can, have analysts and journalists and market makers all kind of, I believe, collude at least tacitly to push retail around. And bottom line with all these things, guys, is they want retail to buy at the top and sell at the bottom, or they want retail to buy options that will become worthless at the end of the week. Whatever it is, guys, they've found a lot of ways to make money off the SoFi stock. But with only 15 million shares traded and 3 million of those borrowed shorting, the stock's still sideways. So retail's not dumping. Retail doesn't have stop losses at 750. Guys, the people who didn't sell at 1150 or didn't sell before earnings at 950 are not going to dump at 750. And then if you read this article by over on Seeking Alpha, you'll look at the inflows in Q2 into with hedge funds, guys, and not only were there 5% more um, hedge funds in the stock, but their actual stake increased, the number of shares increased by 19% in Q2. Now, you could argue that some of that was short long activity because there was also a big increase in the short in the run up pre earnings, but that was more. Um, I don't believe that would account for that large a change. BlackRock and State Street also increased their long position in SoFi by 6.4 and 13% respectively. 0.72, Stephen Cohen did exit their position. They are looking at the money flows from these big stocks into stocks like SoFi. That was the case in Q2. Now, that's why I say this is mechanical, because fundamentally it was quite a good quarter for SoFi. While the EPS didn't move, I would argue at this stage, the focus on earnings, the focus on EPS is more of a distraction. Yes, I want SoFi to make that gap net profit in Q4, but you could also make a strong argument that these high sustained interest rates present a huge opportunity for SoFi to grow rapidly, and they should not focus on EPS, and they should not focus on net profit this year. They should focus on taking market share from the big banks. They should say, hey, not only are we going to get the business checking online, not only are we going to revamp our trading platform more expeditiously, we're going to start bringing these changes, we're going to start being far more aggressive. I want to see SoFi. They're just a little bit too conservative, and I know that's how Noto is. I know that's how his mind works. He wants to exceed his numbers. He wants to exceed expectations. But guys, we can take the gloves off here and we can take serious market share over the next year if we are willing to pay the price as long term investors. Basically, what SoFi could do is offer like a 5.5% interest rate with direct deposit and increase their loans on the balance sheet rapidly, get people refining credit cards from other companies that have really high credit. SoFi is extremely selective on their personal loans. They could loosen up a little bit. They would probably, of course, see more defaults. They would take on a little bit more risk, but SoFi is extremely, extremely conservative. If you shoved a lump of coal up Noto's ass in just a week, you'd have a diamond and it would be beautiful and sparkling. But I digress. But what I'm saying, guys, is a company that's in this rapid growth phase, 30%, 40%, some metrics. Um, the technology side, we need to see that growth kick in, but I believe we are going to see that. And basically, what I'm saying is, I think investors who say they're long term are just focused on the wrong things. And the notion that this stock is organically selling off from 1150 down to 750, very rapidly is just ridiculous. This is what the mechanics do. The mechanics took it up, the mechanics take it down. Could the mechanics take it to 6? Yeah, but I don't think they will because these hedge funds are going to clean their clock. They're going to come in heavy. Like, why would the shorts want to take this thing down when Noto keeps delivering? Usually, to short a stock, you need some type of fundamental reason, some type of weakness. The company's failing, the company's going bankrupt, the company's losing customers. You don't normally see a company that's expanding their margins, rapidly expanding their EBITDA, moving toward net profit very, very quickly. All their business segments are going to be profitable in Q4. I mean, they added 600,000 members, record growth coming into football season. All the effect of these concerts, SoFi Stadium. SoFi Stadium, the effect of that is really accelerated in the second half of the year because that's when the football games are on TV. That's when all the people are at the stadium. That's when the eyes are on it. The brand recognition keeps going up and up and up. They are taking market share from big banks. And that's why I don't think shorts are going to take this thing down. And I think you're going to see this thing stall out at 750. Of course, as you know, everything depends on the overall market. The Fed can come out and make some hawkish comments and, it destroys the market and it checks. But the bottom line is, I think the intelligent investor, the institutions, the hedge funds realize that SoFi does extremely well in a high interest rate environment. And they can use that as a tool to take more and more market share because the big banks cannot afford to pay the high interest rates. Now, maybe Discover can, and a couple of these other companies that are, that don't have physical branches, that don't have all these legacy costs, can compete with SoFi on interest rates, but they can't compete with SoFi elsewhere. People don't trade stocks on Discover. People don't. They just aren't looked at in the same way. Some of these online banks, Ally Bank, very good company, very solid management. But I believe SoFi can actually offer customers more. I believe the younger, more affluent customers, no one is really catering to these customers that were SoFi is taking. They're left behind. They go in line at these big banks, you get no service, you get no help, and they take your savings and they give you 0.001%. If SoFi says, hey, we're going to pay you 5.5% with direct deposit or 4.75 without direct deposit, they will have a flood of money coming in. And they'll still be able to make money because they're saying holding loans on the books, it gives them 2% more ROI than if they sold the loans off. But I believe SoFi's loans are going to be in more and more demand in the secondary marketplace because the people buying loans are going to want to avoid risk in this environment. You are going to see increased defaults. You are going to see consumers get into more and more trouble, and they're not going to want to buy loans from some of these lesser fintechs. Why would you want to buy loans from a firm taking these smaller, crappy consumer loans that are going to default in higher and higher numbers when you can have, 750, 760 borrowers with, close to $200,000 in income? These are people that need their credit score for their lifestyle. They cannot stop paying their bills, and they will not stop paying their bills. And yes, of course, weakness in the overall economy, a bad recession, you are going to see SoFi borrowers default in higher numbers, but it's not going to be as bad as many of the other lenders. In fact, they will probably be able to weather the storm far better than most. Now, what's my deal with the shorts? Essentially, I think what's happening here is they're lining up for their next bullshit move basically around the earnings report. The this is going to be their last bite at the apple, where SoFi's EPS are going to be somewhat disappointing, I believe, at least to longs, people wanting, a net profit. I don't think that's going to happen. The short is heavy, guys. If there is a surprise Q3, this thing is going to really catch fire, because I think institutions, they want confirmation that there's definitely going to be a net profit, and then that's going to be sustained and is going to grow over time. If you look at the EBITDA revisions, if you look at all the trends, if you look at all the numbers, um, SoFi is going up. It's only going in one direction. Again, I would encourage you to read this article in Seeking Alpha. They do have some bearish authors, but it's generally more of a positive sentiment. They're talking about the importance of the Instacart IPO and how those fees that you make on these IPO underwriting, it's basically just gravy. Like, you make a fee, you sell this on to your clients, and in this case, retail investors, your members, and you just get money. It really doesn't cost you that much. Now, you take on some risk, because if the whole thing blows up, I think the institution agrees to take those shares. There's different, I'm not saying it's without risk, but basically something that's high profile, they're going to be able to sell those shares. I mean, SoFi's members were only allocated a small fraction of the shares they asked for. I'm seeing a lot of people bitching about it on Reddit. So, um, can't get it. Some reason my stock twits account got locked. I think too many people like put in complaints about me. I don't know. I don't say anything on there, but I don't. Whatever. I could care less. It's a waste of time. Specifically, SoFi stands to earn substantial fees from its role as an underwriter. While exact fee structures can vary, it's common for underwriters to receive fees ranging from 2 to 7% of the total funds raised in the IPO, 616 million. So SoFi's fees could range from 12 million to 43 million. That's a very significant bump to the quarterly revenue. So if you can do, 3, 4 of these things a quarter, and you could even just earn $10 million per IPO, $5 million per IPO, you could add, 20 to $50 million to the bottom line every quarter and just grow that over time. I think, people putting out, people going public, companies going public will realize it's very good for them to offer some of the shares to, retail investors, particularly, savvy retail investors, which I think, the SoFi customer is, because you're going to get a lot more press. You're going to get a lot more buzz. You're going to get more pop off of the IPO. You're probably going to sustain it more, because some of those people are going to actually believe in the company and hold it through the storm, and not just flip it, maybe add more if it goes down. So a lot of people, like, I was watching the SoFi Weekly, and some of the guys were arguing, these IPOs can hurt the company because people lose money on them. I just completely disagree. Um, the IPOs are good for SoFi, not only in exposure, but in terms of the money they're going to make, how it's going to lead to growth for the company. I think that's a very, very good thing. Would like to see business banking, would like to see revamp of the trading platform, would like to see quite a few things just updated, things sped up. But of course, I'm always impatient. I want it now, now, now. SoFi, the growth is incremental and strategic and all that good stuff. So what's going to happen? We don't know, but we know the growth is there. We know the growth story holds up, navigating between support and resistance. Just read the conclusion. SoFi's strategic move in the Instacart IPO is emblematic of its transformation from a fintech startup to a formidable player in the financial industry with record-breaking increases in members and products. SoFi has demonstrated its capacity to attract and retain customers, while its robust financial position and institutional investor interest further strengthen its prospect, supporting the bullish stance on the stock. And just the background on this guy: he's a charter certified accountant, former auditing consultant, member of the ACCA with both BSc and MSc degrees, also a private business owner. So I don't know. He seems a lot of people get they go, oh, accountants are idiots. Like, guys, a lot of CFOs and controllers, and they'll be public, CPAs, but they also, like I said, the guy has master's degrees. They'll have. It's not just that you're an accountant and you just crunch numbers on a spreadsheet. You can also have strategic training, strategic thinking, and just. I think people like look down their nose and they're like, "Oh, he's an accountant. Why would you listen?" It's like, dude, you're an idiot. Like, what do you think? Accountants are all dumb, CFOs and these people start off somewhere. Like they go to college, and accounting is a great place to, base your business skills and training on because you have the fundamentals. Like you don't need someone to explain the numbers and what they mean because you understand all that. Like if you look at Noto, he comes from a finance and CFO background. The guy, he knows more than most accountants about accounting. The guy knows numbers like the back of his hand. That's why I'm very happy we have the CFO. We have almost like two CFO level minds, working. Lapointe is obviously very intelligent, but Noto has the numbers just as well as anybody. So that's why I always like to see him interviewed, see him talk about the margins, how they're going to get to that 30% margin, that no big banks can get there, and that they're going to take share from big banks. And, as Chamath is saying, they're going to eventually bankrupt all the major banks. I don't know if that's true, but, I think they're going to continue to do well. The growth story is intact. They're reshorting the stock, I think, almost inexplicably, but it's not inexplicable because you know what's going to happen. Pump and dump or dump and pump around Q3 ER. They're clearly setting up for something. Volume is decelerating into this sell off. I think the sell off is probably over, but I really don't know. They take it to 7 if they wanted to? Yes, but there's not really any options to kill down there. There's not really any puts indicating they want to push the stock down into the sixes. And mechanics being mechanics, they already pushed it from 1150 to 750. They already made plenty of money. Like, believe me, this pump and dump around earnings was extremely profitable for these market makers. And it took a lot of money from retail. I guarantee it. People might not be admitting it, but most people don't flip at the right time. They don't sell at the top. They're buying the top and selling the bottom. What is it? Sell the dip, smell the rip. Like that's what a lot of retail investors are doing. But volume is telling me they just don't want to short it further right here. But it's been stepping down and down. The indexes are green today, but only very, very slightly. And they sort of started off red in the morning, and then they've been pushing up here. I think people are digesting the Fed's comments. You have to look at it like the cost of energy, the cost of food. Some of these things are killing consumers, and then corporate profits are added in there. How much is inflation really, and how much is like just consumers being gouged and us being gouged by the Saudis? And, I don't think, housing prices have sort of stabilized so they've kind of killing the housing market. Like, the Fed's actions are working in some areas. I don't think there's going to be a raise again. I really like SoFi Weekly, the four guys there, and Amit. I agree with Amit that I don't think there's going to be another interest rate hike this year. I think that's they're scaring the hell out of the markets, and it's doing the job. Like it slowed the rally and it increased the sell off and it fed the shorts. But I think as people digest it this week, you're going to see the SoFi stock go back up toward that $8. I don't know if it's going to jump back up or $8 will flip back to resistance. I like to see it jump back into the channel, but that depends on the overall market. Do I think it could sell off down to 7? Of course, anything can happen, guys. If it just takes money, but the market makers have to push it as mechanics. They're not going to get retail to dump down to 7, and they're not going to find a lot of people stopping out down at 7. I'm just they're going to have to just short the hell out of it with their own money, and I just think it's foolish because I think Q3 the deposits are going to look very, very strong. So um, could we see 3 billion in deposit growth in Q3? Absolutely. If we see the member growth and the product growth and the cross-selling increasing and accelerating, the business model is proven more and more every quarter, and it hasn't had a chance to work yet. There's been so many adverse conditions, and I think student loans are going to be better than people think. I think people are going to need to extend those payments, not just because of interest rates, but because of time duration. I think SoFi is going to own that market. I don't think, I think they can easily get half of the student loan refis nationally. And that brings people into the ecosystem. It's not an extremely profitable thing, but if they can get people in and then, give those people also personal loans, get those people trading on their platform, get those people banking with SoFi, it can be extremely, extremely positive. Guys, in short, we want to say happy birthday, cutes. I don't know if this thing is going to break down any further. Of course, I didn't think it was going to break down below 813, so I was wrong. I realized quickly now that I was wrong. With all due respect to my butchering of the great band Social Distortion, guys, I was wrong. Mea culpa. But the whole thing below 8, guys, has been shorting. Like, they shorted 9 million net, borrowed 9 million net on Friday, and before that the stock was still over $8. So today and Friday, the entire redness of the SoFi stock, red rum, has been shorting, has been borrowing. They're just digging in, and I don't think it's sustainable. I think the stock is going to recover to 8, and I certainly wouldn't sell my shares down at 750. If I can free up some other capital, I'm going to buy some more shares down here, in fact, because I really feel like it's decelerating and it's looking to reverse and move to the upside. But I don't know, guys. This thing does what the market makers want it to do, and there's a lot of money that they put both for and against the stock and accumulate, and hedge funds are accumulating, but then they're also shorting. So market makers are still just having a field day with the stock, and as retail investors, we are really at their mercy. All we can do is try to buy and sell at really good times. And personally, right now, I think buying at 750 is really, really, really a great entry point, considering the stock was just at 1150, and before the last earnings it was 650. They pushed it down to 450, which is, like $2 less than it was coming into earnings. This last earnings it was 950, and with all due respect to that ridiculous pump and dump, they pushed it down $2 from 950 to 750, and I think they've wrung everything they can wring out of this mop. Like, I think if you push it down and short it down into the sixes, retail hedge fund, they're just going to buy the hell out of those shares and trap the shorts. So that's why I don't think it's going to go that much deeper. But if the market continues, this sort of phony green Monday here with some money coming back in because people are bored and itchy over the weekend, if this just continues to sell off, SoFi will probably get pushed lower. SoFi is not able to stand up to massive red days in the market. It's not as bad as it was, losing like 8%, because we'll just have to see, guys. But I know there's not much support below 8, so it looks very dubious, but I just don't see the options activity telling me they want to push the stock down in the sixes. But you guys tell me what you see down in the comments. Let me know your thoughts on the SoFi stock. Let me know your thoughts what these shorts are up to. Do you expect a pump and dump or a dump and pump around the next ER? What are you thinking about for EPS? I'm hoping, it's going to be maybe a loss of 4 cents at the worst. But Mark, the analysts are saying loss of 7, loss of 8. I think it's going to be really tough to pull that back to a net profit in Q4 if we're losing 8 cents a share in Q3. But again, they can flip that math and dial in those numbers however they want. They can stop spending in certain ways. They can, sell loans and bring forward certain profits. So there's a lot of things I think they can do with accounting to make absolutely sure that they hit that net profit in Q4. But guys, more than the net profit, I want to see massive membership and deposit growth. I want to see cross-selling, and I want to see the business model working, growing, and expanding. And I think that's what we are going to see in the next couple of quarters and all through 2024. I think high interest rates are going to be good for SoFi, and they're going to be extremely, extremely well positioned with their members and their offerings and their financial wheel, that when interest rates start to go down, I think SoFi catches fire. Maybe now that's not in early 2024. Maybe it's late 2024. Maybe it's even 2025. But I'm here for a long time, not a good time, folks. It's the SoFi stock. Ticker symbol is SOFI. It is January 25th, 2023. It's 10:30 a.m. out here in beautiful, sunny, slightly dreary and overcast Los Angeles. But hope it's a great day wherever you are, guys. We're in the middle of trading. SoFi's flat on the day, down 3 cents. I want to thank you for listening to un poco mas. The little Pachulik trading hour. Happy birthday, cutes. We love you. Princess J, we love you. Thank you guys for being my unit and putting up with me. You guys are awesome. Thank you to my viewers for watching. It's un poco mas. It's Danny Deals for Hurricane Lopez and Stock Karen. We will see you soon. Have a great Monday, and we'll talk at you about the SoFi stock.